Hi students, welcome to Sunil's tutorial. I'm Sunil Mirwani and today we'll be doing this chapter called as Reconciliation of Cost and Financial Accounts. Let's see this. We're doing illustration 1 on page 127. Now guys, first thing that you have to do is do the ruling. You need working note. Your working note is made up of particulars, P&L, debit, credit and cost. This is going to be your ruling of working note. Then you make your fair work. This is cost reconciliation statement as on particulars rupees, right? Costing profit, add less financial profit. Right? Okay. This is going to be a ruling. Now let's start with the sum. We're doing illustration 1, page 127. The net profit of a company for the year ending 31st March 2004. So as on 31st March 2004 is 56,600 as per financial records. Financial profit, guys, is given to you as 56,600. Financial profit is given to you as 56,600. The costing profit is 59,650. 59,650. Costing profit is given to you as 59,650. Now, on examination of both sets of accounts, the following was discovered. Goodwill. Goodwill is an expense. Debit, expenses and losses. Credit, incomes and gain. Expense, so it will go on the debit side. They have given you goodwill written off only in financial record. P&L is your financial record. That means it has not been written off in costing records. Next, transfer fees received. Transfer fees received during the year 200. Debit, expenses and losses. Credit, incomes and gain. You are receiving money therefore on the credit side. Next, depreciation. Depreciation, they are saying as per financial records is 750, as per cost statement is 1000. Next, opening stock. Opening stock as per financial records is 13,000 rupees and as per cost records is 12,000 rupees. Next, closing stock. Closing stock as per financial records is 14,000 rupees and as per cost records is 15,000 rupees. So first thing that you have to do is record all the transactions in working note, right? Now, the rule is, guys, when you're transferring, the rule is if it is a debit side entry, the rule is less is less, more is more. Right? So this is going to be less is less, more is more. You have to keep your finger on cost account. Guys, you have to keep your finger on cost account and you have to find out whether this particular figure is less or more. For example, let's see goodwill. Goodwill is nil in cost account. It is 1500 in financial account. Goodwill is nil in cost account. It is less. Since it is less, it will be recorded in the less column. Less is less. Since the amount is less, it will be recorded in the less column in the reconciliation statement. So you will get goodwill as 1500. Next, we'll first see the debit side entries. Let's look at depreciation. Depreciation is 1000 in cost accounts, 750 in financial account. It is more. More is more. Since it is more, it will go in add column. What will be the amount that will go there? The amount that will go there is going to be 250. The amount that will go there is going to be the difference between the two. Let's look at opening stock. Guys, closing stock is a credit side entry. Okay. Let's look at opening stock. Opening stock is 12,000 in cost account, 13,000 in financial account. It is 12,000. Remember, you have to keep your finger on cost accounts and compare it with cost account. 12,000, 13,000. The amount is less. Less is less. So you will write the amount in less column. Depreciation. Amount is 1,000. Now this is for debit side entries. Now for credit side entries, rule reverses. Less is more, more is less. Right? So let's see this. Let's see the credit side entries. Let's first see transfer fees received. In the costing account, the amount is less. Less is more. So transfer fees will go here in add column. Transfer fees 200. Right? Closing stock. Again, it is a credit side entry. The amount is more in cost account. More is less. That means I will record the amount in less column. So this is closing stock in less column. Amount is 1,000. Tally the account, guys. Add this. This comes here 450, 26, 650, 700. Someone please add this. 59,650 plus 450. 60,100 minus 3,500. Does that come to 56,600? Right? Account tally. Sum is over. Let's do another sum, guys. So do we understand how to make a cost reconciliation statement? Right? Next, let's see another sum. Now we will do question number 2. Illustration 2 on page 128. Working note. First, make your format. Particulars. P&L. Debit. Credit. Costing. That's your working note ready. Next, cost reconciliation statement as on, right? Particulars, rupees, costing profit, add less financial profit, right? Let's start with the sum. They are saying that net loss as per cost records. Net loss as per cost records are given to you as 1,72,400. 1,72,400. Since it is loss, you will write the amount as negative, right? Let's come to working note. They are saying that work overheads under recovered. Work overheads under recovered in costing, right? Now, if they have been under recovered in, if they say under recovered in a book, guys, let's see this. In, any book, a book. If it is under recovered in a particular book, you have to make the transaction in the other book. That means if it is under recovered in P&L, you will make the entry in costing. If it is under recovered in costing, you will make the entry in P&L. So under recovered in any book, entry in other book, and over recovered in any book, you will have entry in the same book. Right? So here they said work overheads are under recovered in costing. Since they have been under recovered in costing, you will make the entry in P&L 3120. Since they have been under recovered in costing, under recovered means you make the entry in the other book. Right? Administrative over recovered in costing. Administrative overheads over recovered in costing. Since it is over recovered in costing, you will make the entry in costing. If it is over recovered in a particular book, you make the entry in that same book. So that is 1700. Next, depreciation. Depreciation as per financial records is 11,200 and as per costing is 12,500. Next, interest received. It's going to be a credit side entry. Amount is 8750. Next, obsolescence loss. In financial only. Loss in financial account only. Next, provision for income tax. We don't have provision for income tax in costing. Provision for income tax. So it's an expense 40,300. Next, opening stock. Opening stock is given to you as 52,600 in finance and 54,000 in costing. Next, closing stock. Closing stock is a credit side entry. In financial records it is 52,000 and in cost records it is 49,600. Next, interest charged in cost account only. It has been charged in cost account only 6,000. Next, preliminary expenses written off. Preliminary expenses written off, expense 950. Once your working note is ready, then the sum is very simple, guys. Less is less, more is more. Look at work overheads. Remember, you have to compare with respect to cost account. In costing, work overheads is 0 and in P&L it is 3120. It is less in costing. So you will have work overheads in costing, amount is 3120. Next, administrative overheads is more in costing. So administrative overheads will come in the add column, 1700. Depreciation is more in costing. So depreciation will come in add column. What will be the amount? It will be the difference between the two. So that will be 1300. How did I get 1300? 12,500 minus 11,200. Interest received is less in costing, but it is a credit side entry. For credit side entry, the rule reverses. It is less, so it will go in more column. Interest received 8750. Right? Obsolescence loss is less in costing. Is 5,700. Next, provision for income tax is less in costing. So it will go in less column. Provision for income tax amount is 40,300. Right? Next, opening stock is more in costing. So you will have opening stock is 1400. Closing stock is less in costing, but closing stock is a credit entry. Less is more. So closing stock will also go in add column. 49,600, 2,400. Interest is more in costing. So interest charge will also go here. Interest charged 6,000. Preliminary expenses is less in costing. So preliminary expenses will come in the less column. Amount is 950. Someone will have to help me with the addition. Someone please help me add this. This is 17, 27, 3,000, 3,000, 11,000, 12,000, 13, 14, 14, 20, 20,800, 21,550. Someone please cross check. 48, 48, 48,000, 49,000, 50,000. Right? Done? This is right. Someone please subtract this. 1,72,400 minus 21,550. 1,72,400 minus 21,550.
1,50,850.
1,50,850. Someone please add these figures and check whether my addition is correct. Right? Someone please add these two figures. 1,50,850 plus 50,070.
2,920.
2,920 sums over. Right? Let's see one more sum, guys. Let's do illustration 3. Let's first get the setup done. Working note. Particulars. Profit and loss. Debit, credit, costing. This is cost reconciliation statement as on particulars rupees. Right? Let's see the next sum, guys. Let's see sum number 3. In question number 3, page 129. Now, the following information is available from the cost and financial accounts of Progressive Limited. You are required to prepare a statement and reconcile the two. The following items are shown in financial account but not in cost account. That means these items occur only in financial account. Loss due to obsolescence. It's a loss, debit expenses and losses 3,700. Next, provision for income tax. Provision for income tax. Again expense, debit expenses and losses. Next, reduction in value of stock. Loss again, so on the debit side 6,000. Debenture interest. Debenture interest is 4,000, loss again. Next, loss by fire. Loss by fire is 1050. Right? Next, you have interest on investment. Interest on investment. You must have received an interest. That's a credit side entry. 6,000. Bank interest and transfer fees received. Bank interest received. Amount is 1225. Next, rent received. Rent received, income 2000. They are saying that in addition to the above information, in cost account, work overheads in cost account have been estimated to 26,000, whereas they have been charged at 29,120 in financial accounts. Next, in cost account, administrative overheads have been estimated to 20,000, whereas in financial account it has been debited to 18,300 only. In cost account, excess charge for depreciation. Depreciation is excess in cost account to the extent of 1,300. Next, the profit and loss as per financial account does not agree with cost account. The profit as per cost account is 1,72,400. Right? Let's see this. You will have costing profit and less financial profit. Fine. Now let's see this. They are saying that the profit as per costing account is 1,72,400. 1,70,400. Let's start. Let's look at the working note. You have to do it with respect to the costing account. Keep your finger on costing account and check whether the given figure is less or more. Right? So here, in the first case it is less. So you will have obsolescence loss is 3,700. Next, provision for income tax is also less. Provision for income tax is 38,000. Next, decrease in value of stock. Decrease in value of stock is given to you as 6,000. Next, debenture interest. Debenture interest is given to you as 4,000. Next, loss by fire. Loss by fire is given to you as 1,050. Next, interest on investment. It is less in costing, but it is a credit side entry, hence the rule reverses. Less is more. So interest on investment is 6,000. Next, bank interest received is 1,225. Then you have rent received 2,000. Right? Work overheads is less in costing, so it will go in less column. Work overheads 26,000 and 29,120. 3120. administrative overheads are more in costing. Administrative overheads are more in costing. 20,000 and 18,300. So that's 1,700. Depreciation is more in costing. So depreciation 1,300. Someone will have to help me add. Someone please add this. 6, 7, 8, 9, 10, 11, 12. 12,225. Right? This is, someone please cross check, huh? 6, 4, 1,84,625, 38, 39, 40, 41, 41, 51, 52, 52 and 3, 55, 55, 55, 7 and 1, 800 and 70. This addition is right. This addition is also right. Someone check this addition out, guys. Someone please check this. 1,84,625 minus 55,870.
128,755.
Right? That will be the answer for that. Fine, will we get this thing clear? Let's stop here for the day. We'll move ahead with this in the next lecture. Thank you very much.